All right, let's dive right in. Today, we're tearing down a professional trader's entire game plan for one single critical morning. We're going to see how a strategy that was probably hours in the making gets completely tossed out and rebuilt from the ground up, all in just a few moments, based on a couple of key data points. And it all starts with this, just 3 words, a stark, simple command that flips the entire system on its head. This is the exact moment the playbook gets ripped to shreds.
So that's really the big question, isn't it? What kind of signal is so strong, so clear, that it makes a complex system do a complete 180? To go from betting on a crash to launching a maximum bullish attack? Well, that's what we're here to figure out. Okay, so let's get into the pivot itself. It all boils down to one single number that showed up and basically invalidated everything the system had planned to do.
And here it is, 344.95. That was the pre-market price for Tesla. Now, by itself, it's just a number on a screen, right? But in the context of the system, at this specific moment, it was an earthquake.
So why was this one price such a game changer? Well, first, it popped just above a really critical technical level called the volume-weighted average price, or VWAP. You can think of that as the true average price for the day. But even more telling was the order flow. There were 41 buyers for every 7 sellers. I mean, that's not just a little bit of interest. That's a tidal wave. That combination screamed unexpected, powerful bullish momentum. And just like that, the entire bearish plan was toast.
And you can really see the whiplash here. The system went from shorting Tesla, literally betting money that the price would fall, to a maximum bullish stance, getting ready to bet aggressively that the price would absolutely surge. A total flip, all because of that one pre-market number. So with the old plan in the trash, a new one had to be built, and fast. It was based on 3 core trading concepts. To really get what's happening next, we need to understand these ideas first. So, concept number 1, which was for the big market index SPY, is a gamma squeeze. Just imagine a whole bunch of people have bet that the price is going to stay down. But if the price starts to tick up, well, they start losing money, and they're forced to buy the stock to cover their losses. And what does all that buying do? It pushes the price even higher, which forces even more people to buy.
It creates this massive feedback loop. It's really like a domino cascade. Once that first one falls, it can set off a chain reaction that just feeds on itself.
Okay, concept number 2, this one's for Tesla, an IV expansion play. Implied volatility is just a fancy way of saying how much the market expects the price to swing around. Now, the source material noted that Tesla's IV was at the 0th percentile. 0, meaning it literally could not be any lower. The bet here is that a huge move is coming, and that calm is about to shatter. When volatility is that low, the market is basically a coiled spring, wound up as tightly as it can possibly be. Everything looks quiet and stable, but the bet is that it's about to uncoil with some serious explosive energy. And finally, the third piece of the puzzle, for Bitcoin, relied on something called convexity. This is a really powerful idea. It's basically a state where a tiny little change in an asset's price can cause a huge, and I mean accelerating jump in the value of an option. It's where your potential profits start to go exponential. The best way to think about this is like a launch pad. The asset is primed, it's fueled up, and it's just sitting there, waiting for that tiny little spark to trigger a massive upward explosion in value. So now that we have the concepts, let's see how the system put them all together. This wasn't just 3 random trades. It was a synchronized 3-pronged attack where each asset was given a very specific job to do. And here is that master plan. You see SPY acting as the anchor, setting the broad market stage with that potential gamma squeeze. Then you have Tesla as the amplifier. It's super low volatility, ready to explode and magnify the move. And finally, Bitcoin was the gatekeeper. A breakout there would signal that a big risk-on appetite was hitting the entire market. Every piece had its role, every piece had its trigger. So how much firepower was behind this? The system committed a total of 20% of its capital, which is an aggressive but still very calculated bet. Now, that 20% was split up across the plan. As you can see on the chart, that breaks down to 6% of the total portfolio going to SPY calls, another 6% to Tesla calls, 4% to Bitcoin, and the last 4% was held back in reserve, for flexibility. Now, you might be thinking this all sounds incredibly risky, and it is, but this was not a reckless gamble, not at all.
The system had super strict, predefined safety protocols baked right in to protect capital if the whole idea turned out to be dead wrong. It had all these layers of defense. First, a warning level. If SPY dipped, positions would get cut in half, instantly. Then a hedge trigger. If the VIX, which measures fear in the market, spiked too high, a hedge would kick in. If the Tesla play specifically failed, that position would be gone completely. And then there was the final kill switch. If both the market and volatility went south, the command was simple. Sell everything. Get flat. A cascade of protection. So let's recap. The old plan is out. The new bullish thesis is locked in, the three-pronged attack is structured, and all the safeguards are armed and ready. With all that analysis done, there was only one thing left to do. And there it is, the final command, in all caps, execute convexity plays at market open. No hesitation, just a clear, decisive instruction to unleash the entire plan the very second the market opens. This is what it all comes down to. And that really brings us to the final thought I want to leave you with. When you see a system that can absorb new data, invalidate an old thesis, and build an entirely new, complex strategy with all these safeguards, all before the opening bell even rings, it really makes you wonder, doesn't it? In a world of such powerful, automated decision-making, what's the role for human intuition? Something to think about. Thanks for tuning in.